All right, all right. Hopefully everyone's good. This is going to be video 3 on our edge-based trading series. We're doing an edge-based trading utilizing the market structure and true vibration. So I'm going to assume everybody's already watched video 1 and video 2. We're going to take a pretty significant leap here in video 3. So one thing I'll tell you is that if you're watching this one, you haven't really watched the others in a way that you can grasp it. You know, what I usually say is like, you should be able to reproduce that video. If you're really trying to utilize this type of technique that we're getting into, you should be able to, without the other videos, go through a chart and show someone else essentially what I've shown you so far, which is pretty basic stuff, right? But you should see the edge that we've referred to. You should be able to show some other people it. Hey, here's the edge in these situations and these situations, and essentially go from there, right? So we're just going to jump right into this now to continue on. I'm going to go ahead and give you the rules that we went over on the last video. So let me go ahead and show this to you. Just got to clear this up right there. They're going to be here eventually. Okay, well, we'll get to what else is going to be there in a minute, so don't worry about that. I'll let you pause this, write this down if you haven't already from the last video. I'll read them real quick. What is this? Well, basically, we're going to label our pivots. Our pivots are going to be based off the tool that we're utilizing, which is called FSR. And we're only going to have 3 options for upside and 3 options for downside. So we're really simplifying it. And this is essentially going to give us directional bias based off a time frame that we're looking at. Doesn't mean there's not other ways to trade. Doesn't mean we can't add other things to it. We're going to, in fact, do that down the road. But we're going to try to keep it as simplified as possible for now. So if you see something, say, oh, well, I wouldn't take that trade because of X, Y, or Z. Just dismiss that for now. We're just going to utilize the things that we've been going over and go from there. So first and foremost, a 1 up or a 1 down, depending on directional bias, depending on which one we're looking at. And I'll explain it in a minute. So everything you're seeing here, I'm going to translate that in a moment so that you could see it in the charts. So don't worry about that. But you do want to know these rules. That's actually very important. So if you could jot those down, if you commit them to memory, obviously you're going to want to do so eventually. But for now, I would go ahead and write it down because you're not going to want to refer back to this over and over again. So the rules are simple. I'll read them. A directional bias lean towards continuation in the current direction of the market structure when we get a reset on FSR. What does that mean? It means we're going to have a lean towards one direction in the chart based off a reset that we've seen on the indicator that we've spoken about when we have a read from market structure. Now, we've already talked about this in the last video, which is that the market structure direction is going to be based on price action continuation until we see a change of character or break of structure. So that might, I just knocked over a bunch of things. That might confuse a bunch of people, excuse me, but it shouldn't. So really it's just a matter of looking at higher highs, higher lows. Higher highs, higher lows is going to be an up structure, right? Or looking at lower lows and lower highs. Lower lows and lower highs would be a down structure. And then when we get some sort of break of structure, or what people would refer to as a change of character, we're going to utilize that on that time frame as a temporary flip. Now, oftentimes that's going to be incorrect. Markets chop up. But you're going to see how utilizing the system doesn't get you too hurt even in those situations when you're incorrect. Now, keep in mind, it's trading. There are going to be times where you're just simply wrong, where something's happening. We're looking on the 4 hour, it's happening on the daily. We're looking at the 4 hour, it's happening on the 1 hour, whatever it might be. The point is that this is going to give us a form of consistency. Like I always say, you want to learn rules like a professional before trying to bend rules like an artist, right? Eventually, when you really know your stuff, you bend the rules a little bit, right? You might see a few different things and say, well, I'm going to go against the prevailing thought process because of my situation, X, Y, or Z, whatever it might be. But for now, let's follow me with this so that we'll see if you'll agree with the things I'm going to show you, okay? So to repeat that, the directional bias lean that we're going to have will be towards continuation, and that's going to be in the current direction of our market structure in our lower lows and lower highs. When we get a reset, which I'll explain on the chart in a minute, in case you just to make sure you understand. Now, then we have those are the only ones that are going to be directional plays that are in the direction of the prevailing trend. That might confuse people. You might say, well, why is that? Well, does that mean that's the only trades we could take? No, not at all. In fact, when you're in a one down, you might look for all kinds of other reasons. Those other reasons are not going to be resets, right? And I don't want to flip back and forth on the chart right now, but I'll explain it when I show you some one ups and one downs in a minute. So don't get too confused by that, because I think that could throw some people off and go, wait a second, the prevailing trend only has one read, which is a one up or a one down. Yes, that's true. And that's the one actually that we should feel most confident in, right? That's the one that's going to have the most confidence. Why? Is it because they have the highest hit rate? Not necessarily, but they will be the ones that tend to give you the biggest returns, right? Because the one up and one downs are the ones that are going to tend to trend more often than not. Whereas the other two are counters, which I'm going to explain them, a two up or a two down. A two up or a two down is going to be a counter trend directional bias, especially on lower time frames, which means that if I have this signal on the 4 hour for a counter trend, and I'm going to explain it in a second, well, then I'm going to be more interested in that on the 2 hour or the 1 hour. I might even look at a 30-minute or 15-minute. Be careful because you can get chopped up down there. But I will show you this about halfway through the chart, or halfway through the video, and you'll have a better understanding of it. Let me get a sip of water. All right, thanks for the patience. So you'll understand it better when I show it on the chart, of course, but I just want you to understand. Counter trend directional bias, especially on lower time frames, right? Which means that when I get the counter trend read, I do prefer to drop my time frame. You notice I didn't say that on the one up and one down. Now, same thing. I do drop time frames as well on one up and one down, as you can get a little bit more specific in targeting your entries, but it's not as necessary, and you'll see on the charts what we're talking about. But on the two up or two down, you're specifically going to want to zoom in on the chart and find some more reasons to consider going that direction. But the answer to this, again, what I said is the definition is counter trend directional bias, which means that we've established that the directional bias might be down, but I'm willing to consider, you notice that's in quotations, I'm willing to consider counter trend plays opposite of the current market structure if this occurs during, I put and, right? Bad English. I gotta fix it or it's gonna bug me. Where's my two up and two down? If this occurs during an FSR, really should be a FSR, but I'm not gonna change it again. An FSR reset at a higher low for longs, or during an FSR reset at lower highs for shorts, right? Again, I'll show you on the chart if that flew by you. My apologies, but you'll understand. Then the next one's pretty simple. It's a 3 up or 3 down. And basically it's another counter trend directional bias, which means I'm willing to, again, consider, I should have put it in parentheses again, consider, because this is actually weaker than the 2 up or 2 down. But I'm willing to consider the counter trend directional bias, especially on lower time frames again, if it occurs during the FSR reset, during a swing failure pattern. And I'll show you again on the chart. But that's pretty simple, right? We go down, we test range lows in a downtrend. It holds. And then we said, well, wait a second. Maybe it has a good chance to go back to the midpoint or go back to the supply zone or go back to range highs before continuation. And I want to participate. So on the lower time frames, I might look for some reasons to go ahead and jump in that. And that's going to allow me to do that. That's the point here. And then I put a little additional note, which is that swing failure patterns and divergence. Now you might say, well, you mentioned the swing failure pattern here on 3 up and down. I did. But you could also get the swing failure during a 2 up or a 1 up or anything along those lines. So all of those things, if I get a swing failure, and there could be many of it, right? You could have a swing failure versus the previous candle. You could have swing failure within the range. You could have a swing failure within the previous range or an older range or in a high time frame. Any type of swing failure, and these are separate, right? So a swing failure would give me a little bit more of a willingness, right? Which strengthened my view and my interest in this particular play. And so would a divergence, especially a hidden divergence. So if I get a hidden divergence that happens to occur on a 1 up, well then I'm going to be more interested in that 1 up, right? I'm typically pretty interested in 1 up and 1 downs anyway, but regardless, I'm just pointing that out. Okay, those are the rules. Stop if you need to. If you need to write it down, I'm going to jump out of this right now. And we're going to jump into the charts, right? So forgive me as I kind of bring all this up. Let me find that price action again. And we're doing this on a 4-hour, and everything's going to look really crazy in a moment because I already mapped out a lot of this stuff. Okay. You might ask yourself, well, what is this? Why do I got this big downtrodden information here? I think that was from our previous video what I had over there. But anyway, this is the one I want. I basically went through and I mapped out what these will be. Now I'm going to show you for a little while so that you understand what we're doing. But I'm going to show you this in a variety of ways, and then on the next video we'll probably go ahead and go a little deeper because I don't want this to be a 2-hour video either. But I want to give you an understanding of what this will then look like. Now, what I did here is I actually did this here at a crossover. So I want to show it to you. Let's go ahead and just bring this up. So what you'll see is that price action was obviously headed up, correct? You see this? And right here, we basically put in, again, I'm not going to go over the rules on this video. That's for something that I included in the last video we spoke about. I literally included another video so that you could brush up if you need to understand basic market structure theory, things of that nature, and what we're utilizing for this. But I want to point out a couple things. So this is where the change happened. So this is, I wanted to show you like right before the change, which is that we made our way higher. So we made a higher high right here on close. For me, I like to use the higher highs on close. We came back to this particular level, which by the way, would have been now a 1 up. So I didn't mark this up, but this is a 1 up right here. You can see it works out well. You get continuation to a higher high. You end up getting a 3 down. Why is that a 3 down? Well, because you have a reset that occurs in FSR right here. You guys should all be familiar with this now. This is the third video. This is a reset right here. So I get swing failure. I have an ugly rejection type candle, right? All occurring here. And this is why I like the 3 down, because it leads me into this situation. This one, I don't know what I was marking here, but there's probably a reason for that on the lower time frame. So we'll look at that in a minute, but that is not a 2 down. So forgive me temporarily. And that might happen a few times in this particular video. I really wanted to start showing you down here, but I figured let me just show you this in and out between this. So we have a 1 up here that I didn't mark off, which I'll go ahead and mark off so it's not confusing. We have a 3 down right there. This is not a 2 down, so I'm going to delete it so I don't confuse you guys even more, but maybe we'll be on a lower time frame. And then look what happens here. You see how I have, if I go left to right here, I would actually get another 3 down right here. So this is going to open your eyes a little bit of, hey, why are we doing this? Well, we know the market structure's up. And we end up in this situation where we're 1 up, 3 down, 1 up, 3 down. Look how I was able to participate. Now, it's not as easy as it looks, guys, and I want to point that out, right? I want to point out the fact that this is harder to do in real time because there's decisions to make. You might be in this 3 down, you might close it out right here. You might close out here and say, well, wait a second, this could be a potential 1 up again. Now, there wasn't really a buy signal in here to allow that to happen, but it is true that this would qualify again, right? So these are the type of things that I want to point out that I just want you to see the concept, and then I'm very willing to let everybody understand, hey, it's not as easy as it looks. You still have to have some trading chops in here that are going to help you take it to the next level. But still, we can agree that this very basic system is giving us a pivot here and a pivot here and a potential pivot here and a potential pivot here. And in this situation, during this changeover, we see up, down, right? Into this nice formation, right? And then why is this the break? Why do I have that purple line there? Well, this was our low before we set that higher high. Another higher high on close was not set. So our range low is right here. We come back to the range low. We take that range low on close. Once that occurs, this is our break. So I have that arrow down because that's when we would have switched to say, no, market structure, because of the change in character, for the purpose of this system only, is now down. So we're looking at down, which means what? We're going to see 1 downs and we're not going to see 1 ups. That's all that means. So I'm trying to explain that. But I do want to show you something first. So I'm going to show you on this chart. But first, let me just go here and show you this very ugly drawing that I made up really quickly. And why did I do this? Well, I just want you to see that this is essentially what price action typically looks like, right? You're going to say, oh, I'm range bound to a high, to a range low, to a range high. That I break, I come back and test it. I have a new range low, come back to the range higher, the supply zone, come back to the range low. It doesn't hold. I have a little bit of a trend down to a range low, back to the midpoint, to the range low, back to the range high, to the low. Break the range high here. Maybe we're turning around. Nope, that's just going to reject at the previous one. Back to low, back to the high. Break again, back in range, right? Really got some head and shoulders type formation here. This actually is a continuation pattern, back to the high, back to the low, back to the high. So what's my purpose of this? Back into a trend, back to the range high, now the new range, back to the low, high, low, you see it, etc. And now possibly a reversal, right? So this is normal. So why utilize a simplified system like this? Because the simplified system is going to make this a 1 down, and a 1 down, and a 1 down, and a 1 down, right? Those are going to be 1 downs, but they're also going to give me the opportunity to play a 2 up, a 3 up, a 2 up, right? A 2 up to get me back to playing within the range. And then when we reverse, yeah, I might have also a new 1 up. These are the type of things that can occur. Maybe the 1 up occurs here, whatever it might be, or give me that 2 down again over there, whatever. The idea is that within the confines of how the markets move, it does give me an opportunity to participate with a little more accuracy than you're probably used to seeing, okay? And that's the idea behind this, so that I'm not off sides tremendously. Now, let me show you on the charts. Now, first thing I want to do is I'd rather get rid of this because it's a little harder to see. So if we can, just really quickly, all I want you guys to do is just to confirm with your eyes, and then we'll literally get rid of this in a moment. And we're going to bring it back up later when it's necessary. But where you see all the numbers and letters, can we agree that these are resets here? So these are all the red ones are going to be top side red resets, right? See that? That's why the lines are through them. The resets are occurring. Now you might say, well, wait a second, this one started up here. You are correct. There just was not any type of sell signal here. But even in that situation, if you want to call that one, oh, that should have been a 1 down, I don't mind that. Just consider it a loss if that's the case. But as you can see, there's no local high or anything like that would trigger us to enter. But let's say there was on the lower time frame. That's possible that you went to a lower time frame and that one did trigger, and that would just be a loss, and that's okay. That's still going to happen, right? But I just want to confirm really quickly that the reds are showing resets above 90, right? The greens are showing resets below 10, right? So that there's no fabrication here, right? The 2 up, reset, the 2 up is a reset, the 2 ups, another reset, another reset, and continue on and on and on, because I do want to be able to scan through here in a minute. So just proof for the pudding here. I might have made a mistake a couple times, but I do want to show you that everything that I marked off is actually a reset, and that allows me to make the screen a little bit bigger so that I can kind of show you the idea here of what I just showed you on this other chart, but now in actual price action, right? So what do? Well, we see that now we've come from a new trend into a 1 down situation where price goes down into a 2 up. I'm never saying these are easy to play, but I'm willing to say I'm willing to accept counters, right? Because of in this situation, I'm willing to accept a counter into a 2 up. Now, I do want to point out, because I did point out the 1 up and 1 down, what the 2 up is really quickly. So all it is a reset that happens to occur at a higher low than the previous reset, right? Now, a previous reset, this is actually important, right? Because I could see how people might go from here to here. I'm going to consider, for the sake of conversation in this particular video, a reset means that there was a reset to the low, then a reset to the high, and then another reset to the low, right? So if I went low and then low again, I would have to compare those to a previous one. Does that make sense? In other words, if this was a low, I never set the high, and I came back to another low, then that low is going to be compared to the one previous. Hopefully you're understanding that. The point that I'm making is that if they're just hanging around, I'm not going to compare this low to that low until this is done. It always has to go low to a high to a low to a high. Now, you see 2 of them right here, right? So this happens actually again right here. This is actually a good spot here for me to explain this. So that right there is also 2 up. Why? So this is going to help you actually. So I'm glad I seen this. Clone this, and then I'll be able to remove this for a second, and we'll circle back in a minute. All right, so why is this also 2 up? You might say, well, wait a second, price action here is lower than here, and it might be a couple bucks lower. I'm not comparing this level to this level because there was not a top side reset. So I'm considering this all part of the same choppy formation. What I'm comparing is this level to that level. So I always need a reset on the top side in between. So no matter how many in a row I saw, until this occurs, I'm comparing it to the previous one to see. So that's why this would be a 2 up and this would be a 2 up. So not much happens, by the way, on this, right? It's not like I pointed out some great winning trade, but you also notice we're not getting crushed there. We're not losing. We're going sideways. If anything, maybe you took a small loss, whatever it might be. And also, we said we're going to lower time frames, which I'm going to show you in a couple minutes, right, of how that would work. So on these 2 ups, the counters, right, those are all, any 2 or 3, whether up or down, it's going to be a lower time frame look that we're looking at, and you'll understand in a minute how that has a benefit. I'm not going to go super low on this video. Let's just maybe say we'll pick a 1 hour and use a 1 hour across the board as we go through the examples. But what can we see here? Well, look at the ebbs and flows that I'm able to do just utilizing this simple system, right? So now we've shown that 1 down into a 2 up, into a 2 up, into a major 1 down, nice move down, but only to range lows. It just happened to be a sizable move that we're happy to take advantage of in that situation. This 1 down, we said, wouldn't work, right? But it leads us right into another one. We're choppy, right? So this happens. Price action switches around, right? Remember, we have to get all the way back up here to reverse this. And that's another reason why I like to utilize a simplified look at a system like this, because it can allow you to get into some of these 2 ups where price action's been hanging around. Perhaps it's trying to give us some type of accumulation pattern that we can participate on the upside with some of these 2 ups, right? Pretty simple stuff, but you can see how it benefits. Now, you might notice also that, hey, a lot of these 1 downs, now you see a 1 down plus. Well, what is that? Well, that means that we had a swing failure that happened to occur as well, right? So this is a little swing failure. If you don't believe me, just kind of a little quick look there, little swing failure into it. And by the way, some of these you'll see and you go, oh, wow, that didn't go anywhere. Well, look, it did go 4, 8, 12 hours later, we're much lower, 16 hours, right? We're now 20, 24 hours. Keep in mind, I mean, it's 24 hours later before it happens to turn back up and then hit the supply zone again. So we were doing all right. And that's kind of the key. I just don't want to get crushed. I don't want to see 1 downs and the price just jumps the other way on me. That's crazy. And you rarely see that when utilizing this type of system, right? So now this can happen. You get a 1 down. It leads into a more of a divergence, and then that occurs, etc. And you can have price kind of grind its way up, do things like that. Anyway, 2 up, 1 down, 2 up, 1 down, 2 up. You get the point here, right? Into a 1 down, and I picked out this super choppy range on purpose, in case you guys are wondering. I want to show you this. It's easy to show you in heavy trending information. Guess what's going to happen? We're going to have 1 downs on a massive downtrend. It's going to look like gold. But I wanted to show you this slop. I mean, that's what this is, right? Let's be honest. Normally we see this, and it always intrigues me. Everyone's like, oh, you can't trade that? Really? You can't trade it? I mean, that's a little bit extreme. Now, I agree that it sucks sometimes, right? It's no fun. But all this keeps us into a 1 down plus, right? The plus just means that we strengthen our willingness to take that signal because of a divergence or a swing failure, right? So we got that swing failure here. Really, it's a double swing failure. You got swing failure on top of a swing failure here, maybe even a triple, depending on this right here, which I think it is, right? So you literally have a triple swing failure of this level, and that level of the previous candle right here that leads into a massive move, hence the plus, right? That's why we give it extra strength in that situation. So even if you weren't killing it in here, you should have been winning, by the way, right? You could see we're up, down, etc. So even if it's a bit choppy and we didn't see massive gains, our patience pays off as we end up catching yet another move. So part of the system gives you this big move down, this big move down, this big move down again. And we're still in a situation where we know that a lot of times we might be sitting this out because really we're having to wait until we make a lower low or retake this area. But with this type of look, you don't necessarily have to go about it that way if you don't want to. Now, the other thing I would tell you is that if you're fairly new to trading, stick with the 1 ups and the 1 downs, right? And observe the 2s and the 3s, right? Observe them. That's going to be a nice way for you to learn and maybe paper trade them, etc. until you get proficient. When you realize like, oh, wait a second, it's costing me money. I'm actually doing pretty well on these 2s and 3s that I haven't been taking. At that point, start to play with some smaller money and go ahead and utilize them. But the one downs will be your friend, right? You see the one down, one down, one down, one down, chop sideways, one down, chop sideways into a one down, nice one down, another winning one down, a big one down winning, a one down that's just sideways, no pain there, right? One down sideways into a low, into a loss. Now look as things reverse here. Well, things do reverse, which is fine, but guess what? You get a nice 2 up, right? This goes into a 1 down reset, which I'll show you a little bit here, but you probably would have said, okay, I'll take a shot here. Notice we're not getting that. This movement here doesn't happen here. It happens 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 candles later, right? So we're talking about 64 hours, right? 2.5 days later is when that occurs. So I know we have this thing where we look at charts and go, oh, look at that failed. No, you would have known pretty early somewhere within this process of like, no, it's not happening the way I thought, right? And by the way, this would actually have been a 1 down plus, but guess what? It just didn't work because price action is turning. And that's the whole point. You know, this isn't a crystal ball that tells you exactly what's going to happen. It is an edge-based approach to your directional bias, which is going to allow you to catch some of these particular moves, you know, a 2 up here. And by the way, your trading chops may have already had you. I can tell you that if you're in a 2 up, again, I give preference to these 1 downs and things of that nature, but I'm just saying, the people that know what they're doing can also lower their time frame at this point. You know, on a 1 hour, yeah, you're in a much better position here to where you would say, okay, probably the 2 hour, 1 hour chart might have already flipped at this point to something bullish. So that's when people hear me talk about like, well, I'm probably operating on a lower time frame. A lot of people probably don't know what I mean when I say that. Well, this is what I mean is that, well, I'm in this indecision mode where I can say, well, I could see market structure is trying here. We're not putting in higher highs, but these are certainly higher lows, right? So in this environment, I might want to consider a trend change, and I would have to be on a lower time frame to really play this out, at least according to this particular system, right? But regardless, just act like you did, and we're going to stick to this one. 1 down didn't pay off here. Eventually, it starts to move again, which is fine. We were already out at break even, maybe a small loss. And then eventually, guess what? We break back to the upside. That is the level we had to take to break structure to the upside, which means what? We're going to be back to an environment where we see 1 ups, not 1 downs, only 1 ups, and we'll see 2 downs and 3 downs. That's it. Okay, so same scenario happens again. You can see it's all mapped out the right way, etc. See that 2 down there. All these things are there, so let me just kind of make this bigger so that you can understand that we end up going back into a 1 up scenario. Now, it's not going anywhere, so that might be a little clue for you. It's like, oh, wait a second. This 1 up, yes, I could have made a little bit of money, but we could see that we lost this particular range. We came back into it. We're rejecting from it. There's obvious supply there. That was a big candle, by the way, right? You may not even have wanted to take this 1 up because of the fact that you just had this major candle that dropped before it. Some people are open to that type of risk. Others aren't. Again, those are decisions you're still going to have to make. But regardless, when we look back at it, we're going to say 1 up into a 2 down, into another 2 down, right, that we showed right there. And that was the example. The reason I put that there is that it is, in fact, another 2 down. But we do have to remember that we're comparing it to the previous level here until we had another reset in between, right? So that's always going to be the situation, okay? So you're there into that 2 down, into a 1 up, into a 3 down again, into a 1 up, into a 2 down again, into a 1 up, into a 2 down again here. Now this is one of these 2 down situations where, by the way, according to the way we did it, we probably are break even or maybe even a loss, but your trading chops can come into play here, right? I'm in a 2 down. The 1 ups aren't going anywhere. I come into a divergence, right? This is a nice situation to say, hey, well, maybe I could have played that, but again, it's not what we're talking about on this particular one, so that's okay. We go back into this 1 up that does nothing, just flat across, but what you didn't see is the 1 up didn't do what? Drop out on you, which is nice, right? That's what we want to avoid. But eventually, after several days, I mean, this is literally 6 days of action here, we then see it drop again, and we have another flip. Remember, I've shown this area because it is especially choppy, which is the whole point of me showing it here. Now, we get the flip right here again, come back into this area here where, you know, and again, I think I showed, the reason I put the let's act like we flipped is that there are ways to view price action that are a little bit debatable. You know, what I mean by that, some of you can ignore what I'm about to say, but what I particularly mean is, well, hold on one second, I'll explain this to you. Okay. So what I particularly mean here, I'm sorry about that, is that, some of it we talk about a basic higher high on close and then holding a range, and that's what's going to determine our flips. But it's also understandable that some people will look at a thrust higher, right? And they may think that a particular range that might be 3 or 4 candles is not enough for them to consider that as the new range low that needs to be taken out. If that's a foreign language to you, don't even worry about it. Just do it the way you do it. But the point I'm making is that I might view my price action slightly different than you do. And that's okay, as long as we both are consistent in the way we approach it. So as long as you're consistent in the way you approach it, in other words, don't approach it one way today and another way tomorrow. If you do that, you're going to be okay still, right? So that's why I put this here. I said, well, let's act like we flipped here. And I wanted to show the example in that environment, even if you ended up flipping here, you would have flipped right back as price you would have had this one down that didn't work out, and there would have been another flip right back here, because you could see we then closed higher than the previous range high right there again. So we would have been right back to 1-ups in this environment, and we would have been back to 1-up. So loss here, 1-up that worked out well, 3 down that worked out nice, 1-up that didn't get you anywhere, but upwards momentum there, obviously, for close to a day that essentially timed out, and then 1-up excuse me, into a 2 down, into a 1-up again, finally making a higher high, into a 3 down. Now these 1-ups aren't really going anywhere, but we continue to play them, right? You could see why there's edge based into these particular scenarios, these 1-ups. 1-up, and then finally, by sticking it out, we saw a 3 down counter, back into another 1-up, which, by the way, is also strengthened by the fact that, yes, it's at a higher low yet again, right? Again, we're not taking new structure yet, but we're seeing higher lows. That's good, right? Price is building up. Regardless, another 1-up that pays off extremely well there, right? We see an extremely well. This one, I don't know why it's even there. It's clearly not the 1-up. Right there is fine. Get into a 3 down. Why do we like those 3 downs? Because you have a chance to play those, right? 3 down, 1-up into resistance, drop back like that, back into a 1-up. This is another bear flip again, right? So now we're looking only to see 1 downs. If I'm moving too quickly, that means you got to review video 2 again and watch this video a few times as well so you get it, because I really have to move on to other things, and we're going to start moving more quickly in these, but this is just to show you the example of how we're doing a very good job with this of catching pivots, highs and lows, right? Up, bear flip. Now we're going to see 1 down. So this 1 down doesn't do much, right? Because you got that big candle in the beginning, chops out for a while. So I don't want to make it seem like they're always great. The thing we like about it is that when we are trending, those 1-ups are usually going to be the big catches for us, right? 1 down again, into a 2-up, nice counter, into a 1 down again, another 1-up, 1 down right here, etc. Now remember, you can get a 1 down here and a 1 down here. The issue is, what you compare it to more than anything else, but it's going to occur that way. Now sometimes you'll see it, and again, something might just be happening in a higher time frame. So when the 1 downs don't play out, it just means that the momentum popped in that situation. It just wasn't ready, and price action needed to kind of level itself out for a while, and that's what happened ultimately. But regardless, chop up city here, no signals within that, back to a 1 down, back to a 1-up, back to a 1 down. Not much going on here again, but you notice they're not going the opposite direction of what we're looking at very often, which is our whole goal. And I haven't even shown you this on the lower time frame yet. We're actually just looking at these 2s and 3s on the same time frame, and you could still see that you have a nice ebb and flow with the highs and lows. Back to a 1 down, downside action. Back to a 1 down, downside action. Back to a 1 down, downside action yet again. You might see this and say, well, wait a second, isn't this a 2? It's not a 2 because it's not a higher low. By the way, this would have been a 2-up, right? So I didn't mark it off for some reason. Why? Because you would have compared it to this one. Yes, this is a higher low. This is a 2-up, back into resistance. With the 2-up, you might consider playing them longer, but for the most part, you're going to play them into the resistance. That's what you're looking at for a 2-up. You say, hey, let's try to get that back into supply zone, or vice versa if it was a short into a demand zone if it was a 2 down. But ultimately, you're looking to play it into that range high type situation, or at least into the, not necessarily range high, but into the upper end of the range to the resistance cluster. Okay, one down again gives us downside action. Now, it might have taken too long and timed out on you, so I'll never be against anyone that says, no, I wasn't trying to wait 10 candles later. So I get that, but at the same time, we're going to call a spade a spade. It went down, it went down. Another one down that pays off immediately and continues to pay off very well. Now we're seeing continuation. Now, by the way, a brief mention of this is that when we're in the midst of this one down, there are a lot of other techniques that you might use, right, to consider adding shorts along the way. So you're short here, but again, when we're in a one down, it doesn't mean we won't take other shorts. I'm only viewing this so far as a 1, 2, and 3. So the 1 is the most powerful one, right? So because of that, understand when we're under the presence of a one down, we are in a situation where we're saying, no, we have a lean towards continuation. So we have a lean towards downside action. So we're looking for reasons to short this, and we're looking for reasons to short it along the way. That could be another low time frame that gives us a move. That might be a playing any type of breakout play or something along those lines if we feel pretty good about it. So there are reasons why we would have added shorts along that. We're just not getting into that right now. But the last thing I want you to think is that, oh, one downs are the only shorts. No, of course, one in the midst of the one down, those are going to be some of the greatest trades you can have when you're trending, is to add through that. And we could see that. Look at these candles. I mean, this is a terrible candle. By the way, these little trend lines that we're not even going to talk about are daily scale trend lines. Yeah, if I'm getting a perfect rejection off of these bearish looking, excuse me, I said trend lines, I'm talking about these EMAs here on the higher time frame. These are actually daily scale EMAs. So suddenly if I'm getting rejection candles off these daily scale EMAs, yeah, more reason to add some shorts in that situation. And we see the momentum picture was not looking good at all, and our full vibration looking bad, well under 50, trending down. That's how you get these bursts down into another break of structure. So ultimately then yet another. But then that all leads into what? The 3 up. Why do we like that? Well, because it gives us the opportunity to play a counter even in the midst of garbage to come into something like that. A 1 down. All right, well, we tried our luck at it, but we just go sideways. We didn't lose on this trade, but we certainly didn't win, right? We go sideways basically for the most part, but that leads us into yet another 1 down, right at the resistance. So we like that. Doesn't do too much for us, right? We'll try a couple of these, and very small downside action, but no losses here, right? Not a big win either, because price action's trying to flip on you. It does flip. We get a bull flip on this time frame. Okay, we're going to look for 1 ups. We get a 1 up here. It's weak, right into rejection, etc. Another 1 up over here. We're looking at this low is the one that needs to be taken now in this situation. And ultimately, you go back to 1 up, 2 down, 1 up now that doesn't do much again. We're seeing some of these 1 ups that are struggling. Those are signs, right? We'll talk about that later. But when the 1 ups are doing nothing, getting no lift, not good, right? There's some problems in paradise. It might also encourage you to take the next 2 down when that occurs, right? You might say, well, wait a second, the 1 up's not getting anything going, and now here I am in a 2 down. Why? Because I'm now getting a reset. The bulls had their chance. I didn't do anything with it. So 2 down pays off. 2 down pays off better. We get a bear flip right there. That was the level we needed to lose. We did lose it. You go into a 1 down, it pays off decently, into another 1 down. And this is kind of this situation that we discussed a little earlier, where now suddenly we're back into this bear flip, and we can compare this on a daily time frame. So wait a second, this is a bad look, right? Green under red. We're daily time frame losing these particular levels. Suddenly you drop below them again, and that's what's going to encourage a major dump like that, right? These things are going to start to come together. You're not going to get it at once, right? I just want people to see the signs a little bit more than anything else. So yet again, big 1 down, right? A big 1 down into a little 1 down, into a decent 3 up, into a decent 3 down. Oh, excuse me, 1 down yet again, right? And then we're back to like current price action. But I think you'd have to be almost delusional to not agree that we showed nice ebbs and flows here in this system. And that's all with 1 time frame, right? What I'm gonna do, I know I'm already long into this particular video, but I know the people that are really watching this are trying to learn something, right? And trying to extract some value for themselves. So we're gonna go a little bit longer with this on the 1 hour, and then I'll probably let the rest continue on into the next video, which I'm fine with doing. But I do want to give you a little preview, because this is part of it as well. So just like we had some rules previously, The rules here, maybe I'll add them to the next video, but I do want to take a little look, which is simply this. Now we're on H4. Or excuse me, we were on H4, and that's what we're utilizing for all these little lines. Now keep in mind that in real time, you just need to know, are we 1 up or 2 down or 3 down or 1 down or whatever it is. You're not going to need to know and have all this marked off. That's only for the sake of this particular video so that we can look at a lot of price action. But with that said, I am going to show you now a couple of other scenarios, everything else that we just looked at, but while looking at it from that reduced time frame, right? So we're still going to eyeball this, but now I'm going to have this up because I'm going to look at it from a 1 hour perspective. Now, again, this is easier to do the way I'm doing it right now, right? It's not as easy to do in real time. That's just trading, and you're going to have to get used to that. But I still think you're going to like it. So now that we're in a situation, because I get these type of questions all the time where someone's like, so the 4 hour is showing me a reset. So does that mean that when this happens, I trade? No, it's not so black and white. It just doesn't work that way, and it's not going to work that way. I know you want it to work that way, but what we want to do is we want to have a consistent approach to the way that we trade. Consistent approach is very different than being a computer that takes a trade at X, Y, and Z. For that, we wouldn't need to talk. I could put everything into a bot, and we don't need to know this lesson because I'm basically going to be doing the trading for you anyway, right? It's going to be all botted out, but it just doesn't work that way. I mean, the human eye is going to have a better chance at finding this edge consistently, in my opinion, because of the multiple variables that we're going to talk about here. But this next step in this process is ultimately just saying, all right, well, we're on the 4 hour. When we enter in to a 1 down scenario, which just means what? We basically have now went over 90 on that 4 hour. Well, then that's when I'm going to lower my time frame. That could go to a 2 hour or a 1 hour. And this is only using, you might use a different time frame. We'll talk about that in another session. But on the 4 hour, we're going to say, oh, we might use a 2 hour or a 1 hour. Now, can you use a 30-minute or 15-minute? You can. I don't want to show you that right now because there's more of a chance of getting chopped in that scenario. But if you got good trading chops, you're also going to find some beautiful trades that way as well. So I completely understand it. And look, I do it. I trade that way. So I'm not going to tell you not to. I'm just going to tell you to really get this and know it and feel good about it, that you can do it the way we're showing it here, that you can do it with some edge and you can feel comfortable and you can mix in with some risk management. You can pick your stops, right? And do all that. And then if you want to sharpen it up a little bit and drop down to a 30-minute or 15-minute, have at it. You know what I mean? Because you have now more of a comprehension of the process, okay? So I'm going to show you a few things. I'm going to point these things out. Now, this is hindsight, so it's a lot easier to do, guys. It really is. But we're going to do the same thing. And this, I'm just going to use a circle as I go through. Hindsight trading is pretty damn easy, but we're still going to utilize everything that we've talked about. So this would be hindsight trading if you had the ability to slow things down and weren't going to miss too many things, right? So what does that mean? Well, we've entered into, this red line means that we've entered into H4, right? Above 90. So now I want to find confluent reasons on the lower time frame to take that directional trade. That can be divergence. That could be the swing failure that we talked about. That can be a reset that's going to match the direction that we discussed. Absolutely. Absolutely it can be, right? So what do we get right here? Well, we got the close here, the close there. I'm not going to arrow it up, but this is a higher close and a momentum that is lower. So we already know that we're looking for reasons to shorten. We're already in a 1 down, by the way, right? But do you understand that now suddenly I'm actually able to get one of the better prices? Now I already said if you want to take that on the 4 hour, that's a trade you can take on a 1 down. You're going to do pretty well. But now if you see that we've added this divergence, if that was a reason for our entry, or maybe we've seen a divergence and we wanted to lose our full vibration, so be it. But guess what else is going on up here? What did we talk about in video 1? That is full vibration hitting that 60 mark, and it's happening in the course of a 1 down. Guys, there's extra edge to that. This is called offsides, right? We're in a situation where we've gone offside. So losing that level, which occurs basically on this particular candle here, is going to be a pretty damn good signal. And now you could see that the payoff looks better as well when you're on these lower time frames, right? So whether you were snipering it up here because you felt really confident, or you waited for the crossover, you still see a nice entry. And that's also going to help you to say, oh, okay, well, let me identify these type of swing failures. So what is this here? This is, well, this is gonna, it's not gonna be 3 down, because the reason I say that is there's a swing failure right here. So not only is there a rejection candle right there, let me go ahead and bring one line out like this just so I can continue to show these. So there is a, let me get rid of the circle for a second. Oh yeah, sorry guys. Okay, so remember, in the midst of a 1 down, I'm looking for other reasons to short, of course, right? Now, those can be these resets, so we might get that other one right there, as I mentioned. So we pointed an obvious one out here, which is the beautiful signal. By the way, how about the little head and shoulders of FSR? Of course we like that, right? So that's a more of a combination here where with the head and shoulders on FSR, you like the price action to not take out the wick of the head, right? That's the only thing I'm looking at. In fact, this divergence is actually better. It actually adds to the head and shoulders, right? So head and shoulders, I love the divergence occurring within the head and shoulders there. So I have so many signals going on here. I have a head and shoulders combined with the 1 down. I have the 1 down on the 1 hour showing me what? Coming off a reset also, which might have gotten me this absolute top here because there was a swing failure. Remember, that heightens everything. In case you're wondering what I mean by that. That is a swing failure right there that took place. So I was already looking for reasons to short. I got swing failure. I got head and shoulders. I got the 1 hour reset. I have the divergence occurring, whether with the head and shoulders or not, also beneficial right there as well. So many good things there going on. But then what might have been some other reasons? Well, again, within the context of this video, it could be this other reset that we see right there into this rejection again. So there's a lot of different reasons, but there might be other contextual reasons as to why I might have looked into this, including the fact that full vibration starts to lose 50, starts seeing losses. These might things I might take shots on these as well. So there's a lot of reasons within a 1 down as to why I would do that. Now again, maybe we'll add another video to the series that kind of focuses on that. But for now, let's just kind of keep it to 1 down, 2 up, 3 up, 1 down, 1 up, 2 down, 3 up, 3 down, etc. Anyway. 1, 2, and 3 up and down. How about that? It's an easier way to say it. So anyway, back to a 2 up here, right? So now we knew we're in a 2 up, which means what? We might look for reasons. We're going to consider reasons, especially in the lower time frame. Well, guess what? This is the lower time frame. So we'll consider reasons to long. Okay. Well, we happen to get a reset right there, right? Right there, we get a reset. This is a 2 up. And we do see a reset that occurred over here. So this might have given us, now if you recall, I'm not going to go back to the 4 hour, but this looked like a crap signal, and it really is still not the greatest, but it looks a little better on that lower time frame. You see there was some room to catch some gains. Now it doesn't mean you would have caught it right here, obviously, but you have a chance here to at least catch a little bit of profit ultimately before this swing failure occurs right there. And from this level to this level, yes, you could have said, no, it's time to exit, because you're in these situations to where you're looking on a 2 or 3, it's always a counter. So we're actually looking to say, hey, let's take some profits when that occurs. But look what happens. While we're in the context of that 2 up, could you have considered taking this higher low reset? You could have, right? If you wanted. We're not talking about that too much on this video, but I'll point them out a little bit as I see them. And then we come back into the situation to where, guess what, guys? I will point this out now in the lower time frame that this occurs where we get a swing failure. We're still in a 1 down. Just the fact that we saw 2 up doesn't mean that the underlying context is still 1 down. So we go 1 down, 2 up. It doesn't mean we're not in 1 down anymore. Of course we are, because that's the primary read. So if that lower time frame, and you want to keep it reasonable, 2 hour, 1 hour, meaning within 2 to 4 time frames if possible, until you really know what you're doing. But this is what? This is a swing failure pattern occurring, right, within the context. So on the 1 hour here, we're in this, we say, oh, okay, well, on the 1 hour, we see that we have a counter going on. But we also have the situation that within the 1 down scenario, you have another 1 down. Why would you have that? Well, because the overall ones are down, right? So you're not going to have any 1 ups going on while this is occurring. So even though this is a 4 hour, if my 4 hour is giving me my directional bias, then on the 1 hour, this would be a 1 down. So that occurs here, We're early here when it occurs, but we see a divergence occur. I'm not saying you should take that, especially until you get good at it, but you could see how you would have started to possibly play that as well. It also happens here, one down, and here, a little bit, chop up again. These are more aggressive, obviously, but that's how you could have played that. Now, quickly into the 2 up. We're still down here. We're looking for reasons to long. This one just chops around, but nothing happens, right? There's no downside action that gets you until you're way over here that would have hurt you. So we're not going to go through every one of these, but I'm just going to point out some of these. One down, but what's going on the 1 hour? Same scenario. We get the extension here that could have got us in at this level completely. So we're happy with that. We're on the 1 down on the 4 hour. It matches here on the 1 hour. Perfect scenario. We like that. We might have taken another shot here, which happens, right? You might have taken another shot, but for the guys that have watched some of my other videos, right, we like to short wholesale prices or buy wholesale prices, which just mean what? It means that if I'm getting a signal here, ideally I want to be above, really I want to be in the 618 to the 1 range, right? So basically range high to the 618. That's where I prefer to take my short. Does that mean I cannot short here? No, I can't. I also like to short down here if things look really terrible, right? Below the 2.236, but you guys shouldn't worry about that too much. Wholesale. So wholesale short would mean 0.618 into that 1 range. Again, that's not the focus of this particular video. I'm just pointing out that although the 1 hour might have given you the signal, this is kind of how you can get caught up again by taking these near range lows. It's a little bit problematic because of the fact that we are operating on the 4 hour scale. It takes some time to really understand that and process that in your mind as you go through different time frames, but you just have to understand that each one of these is 1/4 of a 4 hour period. So therefore, it's very logical to understand that the 4 hour is going to have to come up and reset. And sometimes it comes up and resets into a divergence, right? So that's the point. So let's focus on where these are for now, for the most part of this. We got a 1 down and a signal that gave it to us on the lower time frame that literally gave us a perfect signal on the way down. We got another one down, but that also did give us a signal here on the reset, right? With some divergence, right? So some divergence here, but it didn't pay off. So that happens. That happens because we're operating on the higher time frame. That's okay. We get another signal. It does actually, this is a winning trade, but let's call it a break even because it doesn't do much, right? And that's okay. Back into another 1 down. Guess what? This 1 down, actually you have to wait on. Now you might have said, oh, I could have played this swing failure. But again, let's talk about the resets. We're going to keep a focus here on these lower time frame. And that happens in here to where I will say this got a little long in the tooth. So were you willing to wait the 10, 12 hours for it? I don't know if you would decide to get out at break even. I get it, but it did end up dropping out like that. You go into a 2 up plus, right? That means there's swing failures and divergence, things like that are included. And what happens within that process? Not much, right, on the lower time frame. So even though I have this here, I'm not going to make anything up. The only thing that happens here is that you end up with the plus part of it, which is the swing failure. So we did admit that we like this. So you end up really being in a 3 up on the 1 hour within the 2 up. So this would be part of your entry ultimately. And yes, you could have played that up because of that. Not the cleanest signal ultimately. Back into the 1 down that happens to match again. We get a reset on that 1 hour. Great. It happens to have a swing failure. So it's a 1 down plus on both the 1 hour and the 4 hour. Thank you. Price heads down during that time frame. By any significant amount? No, not really. But let's make the chart a little bigger if we can to kind of show you that these moves are a little bigger than you're probably thinking, right? So your entries in here, you actually end up with the prime entry. That's a nice move down. You get in here, it's a little early, but then into a divergence with the swing failure right there. So you went early. This is a losing trade probably because it bounces back on you because you probably entered down here, which is okay. You say, oh, let me get aggressive. We're probably going to drop out. Nope, didn't happen that way. We come back in for another test. So I like it even better when it happens the second time because I'm a 1 down within a 1 down. So I went 1 down 1 hour, 1 down on the 1 hour again, and that one pays off. Your patience pays off. This one pays off very well. This is a 2 up. We do get a reset with the divergence. See that? Divergence into the reset. Logically could have played this on a 1 hour counter if you want it. Remember, 2s and 3s, you got to like it. You got to like the counter for more reasons than one. And if you're a real novice, just paper trade those for now. But you could see how we're able to get in the mix, get in the fight on these, and do it pretty well. 1 down occurs right there on the red line as we discussed. And guess what? We get a swing failure on the 1 hour. Thank you very much. That's our entry. Perfect. 2 up is the counter. Is there any reason to take the counter? I mean, we got a deep push here. After the deep push, did anything show up? Not really. There's just not a lot going on, right? So remember the counter, you really need something clear, a nice significant divergence or something along those lines. It just didn't come up. If I missed it, my apologies. We're still in the midst of a one down, so if you get this big reset like this, again, is this a little close? It's probably near the midpoint. You might have played it. If you did, it paid off. If you didn't, that's okay. One down, yet again, perfect. We see this scenario again where we say, oh, we had a big extension and it led into a swing failure. You literally have the perfect entry on the 1 hour. Again, you have to be awake. You have to be watching. There could be 100 reasons why you didn't take this trade, but by utilizing this simple look at these things, this is an actual entry based on the very simplified rules that we've shown so far, and you would participate in that when you're watching. If you're not watching, you wouldn't have, right? That's okay. Now, another reset, so I'm one down into another reset on this time frame. It gives me a little bit more, not much, but a little bit more. This one didn't quite make it. It's understandable if you didn't do it, but what you do get here is another swing failure. So yes, you could have entered right there because you're in a one down into a swing failure that we say, yes, we like that on the 1 hour, and it gives us the move lower into this 2 up right here. Do I get anything? No significant divergence, none of that. Nothing comes up in the 2 up that I would have really seen, even though this is a very nice one, right? So I would look cool to say, oh, look, that 2 up paid off really well. No, I didn't see a ton of reasons here to take that necessarily. So, by the time it does jump back, sometimes this is just a slower process. Maybe on the lower time frame, this might have had a reclaim, but on this time frame, not the best signal ultimately to say, hey, I would have played that counter. But it is what it is. It showed the possibility for the counter, and it did work out that way. So we're happy with it. Okay. Back into this one down yet again, right? So here we are, one down. We get the reset on that 1 hour time frame. So whether we played this one or waited for that swing failure, right, opportunity right there, they're both paying off in this situation. They both paid us something. Now, could you have got caught on the pullback over here? Yes, you could have. But ultimately, directionally speaking, which is really my focus on all of this, because you're still going to have to sharpen your game. If you see this already, if you're already seeing it and say, oh, wow, I see this, then where you're going to be weeks from now is going to be a totally different scenario because you're at least seeing it now, and you still have to put it into practice and go for that. But swing failure again, which is what we want. So we want to get that signal, drop the time frame and say, give me a reason, give me a divergence, give me a swing failure, right? This gives us both, by the way. So you see, this is actually a plus scenario because it's a higher close within the 1 hour with lower momentum, right? So lower momentum, higher close, and it ends up being a swing failure as well. So I said, oh, okay, I got plus scenario under a 1 down. Great. Happens to occur up here near range highs. Wow, even better, right? You just gave me 3 reasons, and that's why we end up seeing this. Confluence. I'm not a genius. I don't have any amazing ability to read markets. I'm looking for elements of confluence. I'm looking for a consistent approach in the actions that I take. I'm not the guy. I'm not the composite operator that's deciding where price is going. I want to read what's happened, and from what has happened, make a determination of what I think will happen next based on what I've seen, right? Oh, this looks like a trap has been set. Why? I see 3 pieces of confluence within a 1 down scenario happening at range highs. Thank you very much. I want to join the trap setters. Let me add a short right here as well. Boom. That's it. That's my game. I'm not trying to be LeBron James. I'm not the Michael Jordan of trading. I don't need to be. I need edge, right? I need to step up to the free throw line, knock down my free throws. That's it. I want to get my singles. When the home runs come, I'll take them. But I'm here to protect my account, first and foremost, to actually show a capability of having edge. And then when things are going my way, roll with it. And until then, protect my money, protect my money, protect my money. Oh, I'm on a roll. Good. Because I've shown you plenty of situations where it was like break even, break even, break even, break even. You think I care about that at all? Not at all. That's great. I see a break even as a win. Only break even is not a win for me is when I'm up 5% on the trade and I let it pull back to break even like a clown. That's a different scenario. That's the one I'm upset about. But a normal trade that just doesn't go my way and I still got out break even, that's a victory, right? Small losses, that's a victory. I see it that way. All right. Rolling with this, yes, I will continue on for those that are still listening an hour in almost because I think it's going to benefit people. Now, guess what? We're in the midst of this big 1 down. What do we end up getting here? Why did I show this? Because we get that reset right there. So you get another reset going on right there on that 1 hour. Gives you another leg down. We like that. By the way, we try it again. If we can get it over here, it's not going anywhere, right? We start to see the range out scenario. Remember I did that drawing over here on this previous chart? Yeah, you see that, right? We're hanging out in the range. We go from the range low, try to attack the range high. try to go back to the midpoint, closer to that range high. One more crack at the range low. Guess what it gives us? Oh, look at that. In the midst of this one up, we happen to get that 3 scenario, right? The swing failure pattern, which, yes, is a playable up move now. I don't know what that is, by the way. It might have been like a 2 up. What is this? I don't have it marked up, so it doesn't matter. Either way, it's green, so we know it's some kind of up. And if I get a swing failure with that, I'm happy with that. See this right here? This is a swing failure occurring within my green. Perfect scenario. I like that. Reasonable counter that I could have taken if that's the case. And it leads me right back into a 1 down that doesn't pay off, and that's fine. But look what the 1 down does. Now, keep in mind, where are my entries on this 1 down? Well, I'm waiting. Well, what do I get? Well, I might have taken the swing failure here. If that's the case, I'm chopping around sideways. I might have taken that reset here. You could see some downward bias, by the way. Not much, right? But it's certainly not going up once we get that reset. So a little bit of downward bias. If you held out, you might have gotten one dip. If not, you probably said, let me just get out of here. I'm done watching this. Into a swing failure. Nothing going on, though, right? You're not hurting. It's not going up on you, etc. Not a whole lot going on that's crushing you. And that's what I'm always concerned about. I just don't want to be offsides. And guys that have been with me for years, right? It's very rare. It's not even a brag. It's how often have you seen me where I'm like, oh, we're going to 50,000 instead we go to 15. I'm not saying it hasn't happened. I've been wrong on those type of things, but I'm very rarely just way offside. And this is the reason, because this is my approach. And, you know, it might seem as a defensive approach, but if that defensive approach is giving me the ebbs and flows of the market, I'm happy to do it, right? All right, back to a 2-up scenario. Anything that sticks out, yes, the swing failure here. So I get a little swing failure. Part of the counter I could have participated in. Not much, but I could have had a profitable trade on a counter trade on the 2-up. Great, glad to have it. But guess what? We're still in the midst of the 1 down. So we get reset, down, reset, down, reset, down. By the way, reset with the divergence. That's a reset with the divergence, big down. Thank you. Reset, down. Reset here, small down. Reset here again. These are all in the context of what? The 1 down, because the 1s are the directional bias lean. The 2s and 3s are the counters. I've repeated this 15 times on this video because I want that to sink into people so they understand. We give more weight to the directional bias lean, right? To the one that is going with the market structure. Even when it's wrong, and that's okay. Hold on one second. Couldn't find my water because I forgot that I knocked it over in the beginning of the video. Anyway, back into a 1 down. Now look, eventually this 1 down doesn't pay off, but we get the signal here. We get the divergence. Excuse me. We get the swing failure along with the reset that we want on the lower time frame. Great, but it doesn't go anywhere. Now, if you wait it 20 hours, 20 bars, which you guys know that I'm not big on, it doesn't mean I won't let it happen. Sometimes I let them scoot on through, but I feel like I need another reason after 3 to 8. Now, ultimately, this one is part of this reversal scenario, but it still heads south, right? So this is not a losing trade. It might be a break even. It might be a small win. Maybe if you held it too long, it was a small loss. But again, we're never getting crushed. And I point those out as victories because I believe in that. I believe that's a victory. So here's the counter. 2 up. We got a counter. Do we have a reason to take that counter? Well, there's a swing failure with it. Thank you. So I could enter that counter right there. And guess what? Nice move higher that I would have participated in. I like that. That works out very well for us, right? Into this big 1 down. There is reason to take this 1 down. We have divergence here, but it doesn't pay off too well. Again, this is back into this ebbs and flows of range high to the new range low to the new range high, back to the range low, but this one's building, right? This is one of these reversal scenarios that happened. But in the context of that, guess what? We still could have played one of these higher low counters, right, against this. So we were nice counter higher into the 1 down that actually did pay off now that we're looking at the lower time frame, into a lower time frame counter back to the range highs, into the swing failure that, again, these aren't big payers, but you see downside action for 24 hours here before it does finally flip. So that's, again, the purpose, right? But study what it's doing. If it's not going anywhere fast, that's a signal, right? If we are in a 1 down and we're not going anywhere, well, then we should be on guard that, hey, wait a second, we might be seeing some type of flip here, and eventually it does flip. Hours later, good for us, we're able to get some safety, and then we see that flip that we talked about. We're patient, we're waiting. We see a 1 up occur. Do we get a signal with the 1 up? Yes, we have a swing failure along with that reset. So within that one up, we have to wait it out a little, so I could understand if you covered in here for small win. But again, you end up going back into that supply zone area, which is easy to identify that, yes, we had just lost this garbage. We're trying to make our way back. We end up seeing a swing failure into the 2 down, by the way. So the 2 down has a swing failure pattern. We get that second 2 down that also gives us this one. Let me see. Not really, right? Yeah, this one on the lower time frame didn't give you much, right? So that's okay. So I would say, like, yeah, all those are little divergence. I don't know if this is an easy read, so I don't want to count it as, oh, you know what? Nah, and a 2 down, that was fine. So I don't even want to count that one. Nice move down. So yes, it did give us a 2 down, but did we see a reason on the lower time frame? No, and that's okay. So we might have missed that one. That happens sometimes. Now, we're in this one up, but this one up, it does have this divergence. Sometimes these are hard. When you get the deep move that comes in with the quick move right there, these aren't easy to see, and it's understandable why you might not take this. Yes, there's swing failure aspects right there. There's multiple reasons to take that play, but I can also understand with this formation, it's a little tricky. But you would have definitely taken this one and had this swing failure here as well. So you're here and here as a follow-up on that 1 hour for the one-ups, right? So you're one up on the lower time frame as well. So even if you weren't aggressive enough to take that one, you certainly could have taken both of these and done well. Into a 3 down. The 3 down here. On the lower time frame, see, this one doesn't, it looks like it pays off, but again, this is not a trade I would take. This closed higher. It just is what it is. On that time frame, it wouldn't work for me. So even though this looks like a winning trade to the downside, I don't count that one. But you could see, again, the whole point is what? Is it giving you the ebbs and flows? Yes, it is. That's what we like, but not a trade for me. Back into a 1 up. It does well, but it's choppy, as we mentioned. Back into a 2 down counter right here with the swing failure. We like that. We go swing failure. It's actually a double swing failure into the 2 down. Nice pullback there. So we get a nice counter that pays off. Again, would you have held it through that time frame? No, but even if you held it to here, you're pretty happy if that's the case. If you hold it into range lows, same thing. You're pretty happy. We'll probably do another video where we talk more specifically about what these look like when we're zoomed in. I'm just trying to give you guys as many updates on this as possible. Now, where do we see ourselves? So we're in this 2 down. So that means we're in a 1 up, right? So why point this out? Well, we're in a 1 up. Well, on this low time frame, this would have been a 1 hour 1 up within the higher time frame 1 up. And guess what? It didn't go anywhere. Okay. But you'll hear me say, well, I'm a try again type of guy, right? So we know that's a 1 up. We know that's a 1 up. Guess what? This 1 up ends up being the swing failure pattern that holds on that 4 hour time frame. This is ideal, right? And you could catch literally that perfect spot there, as you could see, and catch that whole move up basically back to swing highs in that situation. Or, excuse me, range highs in that situation, which is nice. And then it gives you some of these exhaustion candles that you could have got out on any of these, which is nice. Like this might have been a pretty good spot to exit because you say, well, a little bit exhausted on the lower time frame and literally could have caught the majority of that. That's why I'm always try again. I don't care if I lose all of those. That's okay, because when I do hit these, it makes up for the couple that I do lose. So I'm always going to be a proponent of that. These, again, you'd have to be on a lower time frame. You could see how these are paying off, these particular resets, but we're not in a 1 down. So these aren't technically signals. You don't have, when you're in the midst of a 1 up, right, on the 4 hour, you're not getting 1 downs because then your particular time frame has to be a 1 hour for that. That you can only have 1 ups when in 1 up. Does it make sense? So if I'm on the 4 hour, the only thing I can get on the 1 hour is a 1 up. I'm not going to get a 1 down. If that's the case, that means I'm no longer looking at the 4 hour, which is okay. You can take a 1 hour if that's what you want to do. Again, if that flew by you, we'll talk about it more in the future, but hopefully some people understand where I'm coming from with that. Okay, let's kind of move through here again just to see some of how this price action, because I do want to end this particular video, would have played out on the lower time frames as we did a couple flipperoos, as I mentioned. We're back into a 1 up with a reset. So good reason why we would have entered into the higher high extension. The 3 down also gives us that 3 down look on the 1 hour, which is something we like. So swing failure, counterplay great, back into another counter, perfect. These actually work out well, so it gives us opportunity to play those counters back into a 1 up again. But this 1 up actually is not, although there's divergence there, this one did not reset. So on this time frame, Although it looks like it has a nice little move there, it would not have been a signal, so we will not count that as a win of any kind. Back into this one up, which is absolutely a signal, and rolls up nicely for you. This 2 down here gives you that reset, so it's a perfect counter reset that matches on that 1 hour. We like that, and that counter worked out pretty well. It's a slow bleed, but it's a winning trade. Okay, back into this. What is this? This is a 1 up that resets on the 1 hour, so that's another 1 up. It happens above this moving average. We like that. So that could have been another continuation type of play if we wanted it. This one could have been another entry, but it would have been a loss. So I like to point that out as well, so you understand, like, hey, you might have went for it again and it just bled out. It happens, right? It is what it is. So I don't want them to seem perfect. Again, these are going to be harder to do when you're doing it yourself. So you want to run through these charts and kind of do this visually like the way we're doing it right now, so you can get used to it before doing the live fire with it. All right, 3 down, pretty obvious of how that played off. This 1 up doesn't do much of anything. The second one here, see, so we're one, oh, I'm sorry, the 1 up is here. So never mind, it did do something. The 1 up, slow grind, it didn't do much, right? But it's more upward. So that's something that always matters, because as long as it's somewhat of upward, you're not losing in that environment. Same thing here. This one's actually a really nice one, 1 up that comes off a reset. Nice move higher, good formation. Into that 3 down that we pointed out. Simply, it's a counter back that you could have, not saying that you would have, but you could have participated, especially with the divergence there, right? So we get triple divergence, right? Divergence, 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 right there at the swing failure. Of course, if you get the divergence at the swing failure, much better. That's what we like to see. That's why we like this particular tool. And yes, you could have played part of that counter, even if you played it to here or you just played it to there. Both are good. Those are counters that might have worked out. Obviously, we like them to move quicker. I'm not suggesting that you would have caught the whole thing, but it gives you the opportunity basically to try. All right, couple more of these, and then I'm going to end this guy right here. We have the 1 up, massive move. You could see that it matches. Boom, right? That's why we love the 1 ups and the 1 downs, because you get the opportunity to really catch something in those situations, okay? 3 downs there for the counter. Thank you very much. 1 up, doesn't go anywhere. That's a little bit of a sign for us, right? Eventually, you'll start seeing and say, hey, 1 up leading into a divergence on the downside. Maybe we're going to flip on a lower time frame. That could be part of that. Should you know that now in the beginning? No, but these are the type of things you can begin to see to understand, like, hey, this is the appearance of supply, right? You don't want your supply, when you rise to a top, you don't want these things to hang out too long. The longer they hang out, that means there is supply present, and it's probably getting weaker and weaker. And of course, you see the 3 down on top of that, not good, right? So that's something that occurs that's not great at all. Back into the bear flip. And just to kind of point out a couple of the big ones here, beautiful 1 down that would have paid off massively for us. Again, I mentioned I'm about to drop this particular end to this video. 1 down that pays off, 1 down that pays off, 1 down that pays off, all in these lower time frames as well. Little 3 up counter nicely. Thank you. The one, we could see some of these resets on the 1 hour that happen to pay off pretty well as well. These are nice when you're in that 1 up type situation. On the 1 downs, we would have looked for the resets to the downside again, all 3 of these. Perfect, 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 right? They're not always going to be like that, but I've done a good job of pointing out the fact that when they are, you're going to be pretty happy. Some of these are chopped up, right? You can see a lot of this stuff is chopped. You're going to get chopped up still. It's trading, but not going to see a lot of the massive losses. Now, the last thing I'm going to leave you with, because I'm going to go ahead and end this particular video. We went certainly long enough, by the way. Massive 1 down into the huge sell-off. Of course, we love that. That's great. Many ways to enter on the low time frame. I did want to show you this last thing. So we enter into this 1 down, short, 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 short. All these opportunities to re-enter shorts before the dump, right? There was signals, there's signs, right? There's footsteps, there's footprints. We could do detective work. We could figure it out that something's going on. And these are the signs. They're putting in effort. It's not working. They're putting in effort. So they were trying, and it was getting them nowhere because the supply was overtaking it. And then people eventually, they give up, right? That's kind of the idea of this process. That's the idea of this particular system, right? Of getting directional bias. Again, it's just consistency that I'm looking for. I'm looking for edge. I'm looking for consistency. I'm looking for a consistent approach that's going to help me to be correct on my directional bias, which in my opinion, next to risk management, is the most important thing. Is it going up or is it going down? That's what's going to help us the most, because if you only trade up when, only trade longs when price is going up, obviously you're going to do pretty damn well, right? And that's kind of the simplified concept of it. The other thing I'll tell you is that go back and look at a chart. So if you start trading this on a poop coin or something else, make sure to look at the chart and see, hey, has this been working, right? Is there enough liquidity for this to work? Find the time frames that work, right? Things like that as well. This video has been super long. We're going to continue on with this. Again, please, if you like what you've seen, I will ask you to watch this video multiple times until it really just sinks in. You should know this like the back of your hand, right? It's not magic. There is no magic. It's not some hocus pocus thing. It is a simplified approach that's going to allow you to be on side more often than not, and rarely significantly offsides, right? So that's the key here. Hopefully you guys like this video. I'm out.